This is Ag Matters PM from the Iowa Agribusiness Radio Network, brought to you by the Iowa Soybean Association, your source for the latest Iowa ag news headlines right here in the heart of the heartland. With reports from our award-winning team of Dustin Hoffman, Riley Smith, Mark Magnuson, and Andy Peterson. Now, from the IARN studios in Des Moines, here's Dustin.
Well, good day, everyone. From the nation's capital in Washington, D.C., this is Ag Matters PM on the Iowa Agribusiness Radio Network. I'm Dustin Huffman, right here on the Capitol grounds and fitting. So I just got done talking with Iowa Senator Joni Ernst and Iowa 3rd District Congressman Zach Nunn, who we're going to hear from in just a little bit. Coming up later on in the program, we're going to hear from Ross Baldwin of agmarket.net. So we send it back to the studios to find out what's going on in those markets today. But first, as I mentioned, we're going to be talking with Iowa 3rd District Congressman Zach Nunn. Some new legislation he just dropped here this morning to help support biorefiners. Of course, as Iowa is the biggest biofuels producer in the country, what does that mean for certainty in the marketplace, and how does that correlate with some of the issues we're facing right now? This new legislation that's coming out here.
Yeah, so this is the Ag Bio Act. It's really focused on innovation. I think we should all recognize over the next 10 years, we have the opportunity to grow in our field an increase of a 70% yield, and that's going to come through smart innovation in the sector. I've tag teamed it with a Democrat on the other side of the aisle. It's a bipartisan approach to this to say, what can we do to get more of a hub and spoke model of real success? Pull things out of Washington, D.C. USDA has gotten too large, but USDA facilities at places like Iowa State University have done some of the leading cutting-edge innovation and work to help grow new yields, to help protect flocks, as we've seen with turkey virus, to help vaccinate our bovine as well as our swine herds. These are all things that are really important, that are frontline solutions being driven by some of our best innovators. And that's not happening in DC, that's happening just 40 minutes north of Des Moines. We want to make sure that that type of innovation continues. And so this adds new grants to the program. Overall, it builds on some of the things we've done. I'll just highlight very quickly here. Existing and new grants to build and help our biorefineries, which is really helping grow our energy independence. Loan guarantees for advanced biofuels and bio-based product manufacturing, so we can get that base to be able to support it. Again, domestically, exactly what President Trump is asking for, made in America. And then also supporting our rural economic growth through clean energy innovation. The bill also mandates that the USDA extend this program year-round. And one of the things that we've seen too many times is that USDA will provide a grant, but then when it comes to harvest or growing season, that grant expires, and we're asking for extension after extension. This needs to be year-round, just like we'd ask for E15 or anything else in the biofuels market.
All right, and so nitty-gritty, for those people that are depending on those jobs in these situations, what is this going to mean for them? What does that mean for the certainty of some of these? We saw during the shutdown of COVID and everything how people were really suffering during that. How's that going to help give that certainty that they don't have to worry about their economy in their small town?
Yeah, so I think for all of us, whether you're a farmer, whether you're a refinery, or whether you're just a consumer, we want to be able to help drive down those prices. We've seen it already happen just in the year alone from this work, and that means fewer supply chain costs mean more affordable things. We saw when Secretary Rollins come out, her work to help inoculate and protect our chickens meant that the egg prices, which had been astronomical under the Biden administration, have finally come back to a place where families can afford it again. We've also really pushed this idea here that with everything going on in the world, farmers don't want a handout. And candidly, Iowans don't want a handout either to see their tax dollars go into this. But what we need is a competitive market space where Iowa farmers can sell. One of the things that was most frustrating over the last 4 years of the Biden administration, we went from having trade parity to a $50 billion trade deficit. And during that time, we had no new trade deals for the U.S. to be able to sell our agricultural products. That cost Americans more, and it also put a lot of family farms on the precipice of deciding whether they could do this next growing season. I'm thrilled to say that when Secretary Rollins came out, we talked about a trade expansion program. She went to 6 countries that following Friday, starting with India, one of the biggest potential markets that we could get into, to really make sure that not only are there trade barriers that are lowered, as we saw with Vietnam, that went from a 90% tariff to President Trump's action, and in 24 hours they went to a 0% tariff, meaning that U.S. agricultural products could get into that market. We've also seen new markets, and that's really where I think we're going to be able to thrive, both for our producers, our growers, as well as our manufacturers and businesses here in the U.S., and that drives down costs for every American.
That again was Iowa 3rd District Congressman Zach Nunn We're going to go ahead and send it back to the studios in just a moment to hear what happened in the closing markets. But first, we're going to take a message from our sponsor, the Iowa Soybean Association and the Soy Checkoff. And when we come back, Ross Baldwin of agmarket.net joins us back in the studios in Des Moines. This is Ag Matters PM.
Iowa Soybean Association is driven to deliver for Iowa's 40,000 soybean farmers. We're proud to provide objective agronomic research, a helping hand with soil and water stewardship, and timely industry news powered by the Soybean Checkoff. Learn more at iasoybeans.com.
It's time now for the Ag Matters PM Closing Market Summary, your source for market analysis and settlement prices from the day's trade in Chicago, courtesy of the folks at agmarket.net.
Well, thanks, Dustin, and welcome back to Ag Matters PM on the Iowa Agribusiness Radio Network. Time now to take a look at the closing markets with Ross Baldwin of agmarket.net. First off, Ross, what do we see going on in the grain markets today?
It was a pretty negative day across the grain markets as a whole. They started the overnight trades on a firmer note, with soybeans really leading the way. At one point, beans were 12 to 13 cents higher. But by the end of the day, as the day wore on, soybeans ended, July beans were 2 cents lower at 10.39 and a quarter. So it was quite a reversal they had. The high they had on the overnight was 10.56. So they closed well off those highs. Over in the corn market, corn nearby July corn was 6 1/4 lower. Dees corn was a half a penny lower at 4.40 3/4. But we continue to see this unwind of these bull spreads that had been working up until recently, and a lot of it just appears to be the managed money crowd exiting this long position that they've been holding. And there hasn't been any one major story that's been driving this bust across the corn market, especially this negative bear spreading action we've seen. But a lot of it just appears to be the weather has been favorable. While it is drier out here in the west, the western corn belt, the weather has been favorable for corn planting, and the west was able to get the corn crop in a timely fashion. And it just seems for the moment that the managed money crowd's looking more at the potential of more corn acres and what that means for the carry out down the road. But over in the wheat market, Chicago wheat was 2 cents lower. Kansas City wheat was 8.5 cents lower. The wheat market just continues to struggle here, as you know, the sell-off's been going on for the last couple months, and wheat's just kind of, it's found a little bit of support down here at the contract lows. It started bouncing here in the last 10 days, but as a whole, this wheat market just, it's hard to light much of a fire underneath it to get much upward momentum.
And then with the tariff situation, there is a potential that we could see a trade deal made with China this weekend. Obviously, huge implications for the grain markets, not only for having that trade back open, but then that would kind of remove a good amount of volatility from the marketplace as well.
Absolutely. That would 100% help these markets out and calm them down. I mean, China's that's the giant elephant in the room here as it relates to trade and just the uncertainty that this tariff and trade war has caused. But and that was the spark that we seen on the overnight trade. It was announced a little after 5 o'clock last night when the equity markets opened that the U.S. and China were going to be meeting here in Switzerland later this week. The trade representatives from both countries were, and the markets found strong buying from that, and that was the main driver of why soybeans were 12 to 13 cents higher. But I think as the day wore on, it was just the markets looked at it more as there's nothing concrete happening. Yeah, it's talks, it's a step in the right direction, but the grain markets look back towards, you know, just what they have been trading here recently, and that's favorable planning and what the forecast looks like.
And then over in the livestock complex, how are cattle and hogs trading today?
It was a lower day of trade across those markets as well. The cattle market had a small correction, I would call it. June live cattle ended the day down $1.15. The back months were not even $1 lower. But over in the feeder cattle market, August feeders were 60 cents lower. The nearby May contract was $1.25 lower on feeders. The cattle market's been making new contract highs by the day, it seemed like here lately, and today we actually, with this little breather that we took, we were a little bit higher after the opening. We did not take out yesterday's highs, which were new contract highs, and so I think today's high, yesterday's high, those are some big levels to watch here. I mean, by all indications, it doesn't seem like this cattle market's probably done yet. the cash markets are just so strong. I mean, cash fats and cash feeders, that's been the big driver of this rally that we've seen. And I don't anticipate that changing anytime soon. So the cattle market, while it's due for a correction, because all it's done over the last 3 to 4 weeks is work higher and make new contract highs. And even today, we June live cattle closed $1.50 off the lows. Feeder cattle, they were $2.50 off their lows. So even with the corrections that they've had, they continue to find strong buying on these pullbacks. And the large driver of that is these cash markets and the anticipation that cash is not done going higher yet. The caution that I would just throw out there is these markets, in any commodity market, doesn't continue to make new highs day after day after day without eventually having a correction. And at some point, the cattle market, it's going to price in all of this bullish news. I mean, my personal opinion, it doesn't feel like we've probably priced it all in yet today, but I want to be mindful of that. I don't think these $2.10 prices for fat cattle, I don't think that's the new norm. I don't think 220 plus cash cattle, I don't think that's the norm. So at some point, we're due for a pullback. But I will say, though, the fundamentals right now have not changed. It looks like cash trade here this week up here in the north, it's going to be steady. I mean, all of steady, if not a little bit firmer. So the fundamental story is very alive and well. But as these futures markets make new contract highs and pull off of them and then fail to take them out, you just got to be mindful of that and what that could mean moving forward, that you could be due for a pullback at some point. And the hog market was pretty quiet. June lean hogs ended the day 25 cents lower. Hogs have had a little bit of a correction here after they've had a nice rally, I mean, for the month of April, and they started pulling back here. But lean hogs, I mean, they're finding solid support at this 200-day moving average, which is around 96.75 for the June contract. So I would watch that for support on a closing basis. If we continue to hold that here right now, I think lean hogs got some room to move back higher. But if you would see June close below that 200-day, I think you could go retest some of that sharp April rally that we had.
All right, Ross, lots of great information today. For anyone who would like to get more marketing information from folks at agmarket.net, how can they do that?
You can reach me at our office here in Anthony. Our number is 712-373-3276, or you can visit agmarket.net to find any of the ag market brokers.
All right, Ross, thanks again for your time as always, and we look forward to more market analysis soon.
Hey, thanks for having me.
And that again was Ross Baldwin of agmarket.net. We're going to kick it right back to the studio to find out how the numbers closed on the Iowa Agribusiness Radio Network market screen. You can find that at iowaagnet.com.
July corn down 6 1/4 at 449 1/4. July soybeans down 2 even at 1039 1/4. July soybean meal up 2 even at 295 even. Soybean oil down $1.02 at 47.33. Chicago wheat down 1 3/4 at 534 1/4. Kansas City hard red wheat down 8 1/2 at 529 1/2. Minneapolis spring wheat down 7 1/2 at 603 even. July oats up 3/4 cent at 346 1/4. On the Merc, June live cattle down $1.15 at 212.52. May feeders down $1.25 at 294.45. June lean hogs down 25 cents at 97.32. Pork cutout down 15 cents at 104.32. And May Class 3 milk down 3 cents at 18.73.
And that was our closing market recap, and that brings us to the end of today's show. You can find all our content online on iowaagnet.com, as well as follow us on Facebook, X, and on our YouTube channel. While you're here, don't forget to subscribe and hit the bell icon so you're notified each time we put out a new video project. Also, don't forget about the Market Podcast, free of charge, openings, middays, and closings right to your mobile device 5 days a week. You can also get replays of the Iowa Ag Matters program, Weekend Ag Matters, and much more. Again, all that one stop at iowaagnet.com. Well, this is my last day in the nation's capital. I'll be returning to the studios on Friday, as tomorrow is a travel day. I hope you've enjoyed some of the content and look for more of it, as we had a lot of great conversations with Secretary Rollins, also with EPA Administrator Zeldin, and much more. From Washington, D.C., one last time on the Iowa Agribusiness Radio Network, I'm Dustin Huffman. This has been Ag Matters PM.